Hey, new guy crew. Hopefully, everybody's having a good day today. Wow, finally a green day for AMC. It's been a rough few weeks. When we take a look at the chart here, look at this. June was great, but July has not been kind to the apes. So today, we start reversing that trend, and let's just hope it continues on. We look at our 5-day trend here. It's not anything amazing, but hey, we'll take it. 7.72% during the market and another 7.5% so far during post-market trading, so after hours. So hopefully that keeps up. So the name of the game today is going to be just conspiracy, I guess, or corruption, whatever you want to call it, tinfoil hat time. But to me, not really, because I think these are pretty legit concerns. And if anyone has the answers to those questions, I would love if you would post in the comments, or if you just post a link and we can figure this out. First of all, let's take a look at iBorrowDesk. If I can. Okay, so when we look at iBorrowDesk, we can see that red line is the number of shares available, right? So, and then the cost to borrow fee is going to be those blue bars. So as we get more shares available, like you look at the end of 2020, tons of shares available, the cost to borrow was pretty low. But look at some of those fees, not too low, 47, 80%. Then you go over here. I don't know why these bars look smaller for some reason. I think it's the number of shares changed, and so the proportion changed. A weird way of making your graph. Okay, let's just start over in 2021 where it makes more sense to us. So when you look at all the shares available, 1.6 million, 41%, 5 million, 4 million, 7%, 6 million, 3%, right? So look at those fees, right? So the fee down is going down here. Sorry, the red line is the fee. And I said that wrong before. The red line is the fee, and blue are how many shares are available. So as the shares available gets higher, the fee gets lower, right? So notice down here, the fee is getting higher because there's less available shares. And that's held true pretty much the whole way through, right? Look at this fee going up here, 26%. This is in April. As we get less shares to borrow, then we get this tiny, look down here. We had 150,000 shares, 100,000, 300,000 shares. And look at our fee, 11%. And then shooting up 75% with 750,000 shares available. Yet now we've got, 350,000 shares available. Look at the fee, 1%. 1% the whole way through. No matter what we do, the brokers are charging AMC. For AMC stock, they're charging the shorts 1% interest. Why? I don't trust the brokers, especially the prime brokers. Questrade, great broker as far as I'm concerned, but I don't know everything. But at the same time, it has to be said that why, when the shares, look right here, barely any shares, 1%, it's not changing. What is the difference? Why now suddenly, when we have all these failure to delivers, and let's take a look at this next chart. We'll go over to the SEC site. Look at the failures to deliver. These spikes here caused this January $20 price jump, right? The dash line is our price, and these green lines or green filled in spaces are failures to deliver. These aren't even very consistent. We just have these spikes. They cover them. Spikes, they cover them. Spikes, they cover their failure to delivers. They go away, right? And so we see the price action. Look over here. As soon as we see price action, it usually is preceded by failures to deliver. And yet, look over here. So here we are in June. Of course, we did have some failures to deliver, and the price was not too bad. As they failed, so went that. But look at this little chunk here, right? These failures to deliver. See if I can zoom in a bit on that. So these are always 2 weeks behind. So it's really frustrating trying to figure things out when you're always playing 2 weeks to a month behind when it comes to these. Because right now we're July 15th, and this ended June 30th. And so already we're 2 weeks, and we just got those 2 weeks data, not the 2 weeks we're on. So we're pretty far behind. But look at all the failures to deliver. And then we see our price up here over $50. Now we know what's happening now. we've been on this downward trend, yet we were on the threshold list for weeks. So we assume that these failure to delivers, which are 5 million, by the way, they're not cumulative. It's a rate that goes up and down. So you don't do what some people are doing, which is add this day and this day and this day and say, oh, we have 30 some million failures to deliver. No, we have about 5 million, 4.5, something like that, 4.2 as of the last count. But that doesn't include the last 2 weeks, right? So we're assuming with all the shorting going on now, knowing you can't find AMC shares anywhere, no matter what they say. Like these shares, they're the same shares over and over again. Like there's no possible way there can be this much selling. Every time they're selling and short selling, there's buying. So the shares are being bought up. Unless day traders are really, really busy, it's hard to explain. And so we'll see what the failures to deliver look like for the 2 weeks we just had, including today, soon, probably in another 2 weeks, unfortunately. But we'll see what the price action does. So maybe now we're starting to see some of these failures to deliver being covered. And that's why after hours today, maybe this is part of it. When we go over here and look at the price, I wish I had a fancy setup where I could have that price in the corner all the time. We're at 38.75 last time we checked. We'll just make sure that that's current. I'll refresh that. This is my high-tech setup and nothing fancy here. But yeah, we're at over $38, right? So maybe there's been some failures to deliver that are being covered right here. They drove the price down so they could do it cheaper, and they're getting them. I don't know where they're buying them from. I think they're making them up. But, we can't prove that yet. Speaking of proving it, an interesting development today. We had Chad Brewer, or at Chad080914 on Twitter, hired Wes Christian, a very well-known lawyer in the finance world, over stock and other high-profile cases where he found a lot of corruption, naked short selling, failures to deliver, all those sorts of things. He's an expert at that. And so Chad went out there and acquired Wes's services of his firm and now has a GoFundMe page to raise money to pay the $25,000 retainer so that Wes and his firm can investigate specifically AMC and to see if they see the things we are hoping for, the naked short selling, the spoofing, the corruption that we're thinking is affecting the share price and keeping it down. So that's coming up. The SEC has a lot of new rules that are now finally in place. We are seeing prime brokers start to eliminate lines of credit. They're trying to tighten the rules up. They're increasing the margin requirements for borrowing. Lots of things happening out there that are pointing in the direction of passes because they know something big is coming. So hang in there. It was a rough week or so, a lot of red days, but now we're seeing the bounce back and we're on the upward trend of about 15%, I think, so far today, if we include after hours. And hopefully tomorrow is a green day, maybe a bit of a gamma squeeze going into next week, and we're back in business. So for all you apes that have been hanging your heads and thinking of selling, hang in there. It's far from over, I think. So I'm not financial advice, but I'm holding on, trying to diamond hand this, and hopefully you are as well. Anyway, that's all I have today. I just want to do a quick update and give you a little bit of information, and hopefully you're all playing it safe, having a good day. See you later, apes. Hang in there. Peace out.